Welcome to Why Voices. To all my young investors out there, it's just good to be in the lab one more time. I got a doozy for us today. I'm going to let you guys in a secret on a company that I have in my portfolio. Uh, it's down for me right now, but it's a steal for you. Okay. I think this is a good time for you guys to get in this one. Uh, and that's no other than a company called Oracle. 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 Yeah, this is a great company, guys. It's a great company. You guys need to put this one in your portfolio. Uh, it's a real good company. What I like about Oracle, it builds the the digital background that companies, governments, banks, hospitals, and even TikTok use. When you guys think of this company, Oracle, I want you guys to think about it. Uh, it is uh, I want you to think about it as the cloud engine behind massive AI models. Okay. When you think of Oracle, I want you guys to think of uh, the databases, the brains that stores the world's information. When you think of Oracle, I want you guys to think about infrastructure, the muscle powering global companies. And some of you guys say, well, what does Oracle offer? Well, Oracle, they offer massive cloud computing, okay? They offer AI ready data centers. They offer enterprise software. Oracle offers cybersecurity, which is huge now, cybersecurity. And they offer financial, HR, and supply chain system. Oracle. Guys need to put that one in your portfolio. In short, if the world was a video game, Oracle would be the server keeping everything running. Yeah, that's what Oracle would be. Okay? And you guys know how I am when it comes to a company. I always like to look at the balance sheet on these companies. And one of the reasons I didn't get rid of Oracle, I bought it. I'm holding it. You know what I mean? And I'm just waiting for the day when the market shine. I'm averaging costing down on mine, but you guys can get it cheap. Y'all can get it cheap right now. And Warren Buffett taught us when you come across great companies with great balance sheets, you need to go ahead and get them. Now, this is not financial advice. I'm just giving you guys information that you guys can think about. But let's look at the balance sheet on Oracle, which really got me. They got assets of $168.3 billion, but their total liability is $147.3 billion. The equity in this company is 20.9 billion. Their total debt, and this is where this is reason why I think that the company is down right now, is $104.1 billion. That's total debt. But some debt is not bad debt. Just depends on what you're using it for. We're going to talk about. So their net debt is $81.7 billion. And you would say, well, what does all that mean? What does all that mean? I'm glad you guys asked that question. See, when you look at this balance sheet, you find, first of all, that Oracle is asset heavy. What that mean? An asset is something that makes you money, but a liability is something that takes money away from you. This company is asset heavy. They own a ton of valuable stuff. Okay. They also carry a lot of debt. Y'all looked up there at the balance sheet. Their debt is their total debt is 104.1 billion, and their net debt is 81.7 billion. They own a lot of debt, mostly, but I found out what their debt is for. Their debt that they own is mostly because they're building, check this out, massive AI centers at lightning speed. That's why they hold so much debt, you know. And a lot of people look at debt as, ooh, something bad. Nah, not this kind of debt. They're building, think about it, massive data centers at lightning speed. They're building them all over. Uh, their equity has been Their equity, however, has been rising sharply, which is a sign of strengthening financial health. Okay? This is a classic big company making big moves. Let me say that again. What they're doing, is a classic example of a big company making big moves. This balance sheet lets us know that they're making big moves, and they're not making no small moves, because they're building these massive data centers at lightning speed. So, how's Oracle in performing? Their income growth. Oracle income has been climbing for years. Their 2025 net income hit 12.4 billion, up from 10.4 billion the last year. The last year. But check this out. What I found out. Their revenue is also raising. It went from 49.9 billion to 52.9 billion, uh, all the way up to 57.3 billion over the last 3 years. Sounds pretty strong to me, guys. Uh, that's what you call scaling, you know, scaling your company in a big way. So I'll say to you guys today, what do you guys think that Oracle looks like in the future? Glad you asked. This company is building AI super data centers around the world. Oracle is powering major AI companies. They so big they power other companies with AI. The automation is 80% of its own internal operation, okay, which is made within, and closing its books in under 10 days using their own cloud tech. One of the top AI infrastructures providers globally. They are. Oracle is one of the top, think about this, infrastructure providers globally. This is the same lane. They're in the same lane, however, with some big time players. Now they not these big guys here, but they in that same lane as Microsoft, okay, Azure, Amazon, AWS, and Google Cloud. Except one thing about Oracle. Oracle is growing faster in cloud infrastructure than all three of them. See how they in the same lane as the big dogs, but they're growing faster in the cloud infrastructure. I love that about Oracle. Okay. So why Oracle is a good company? Well, why do I think Oracle is a good company? I'm going to give you a bull's perspective, and then I'm going to give you a bear's perspective. Why I think the company's good, and then why I think the company is bad. I'm going to let you guys make your own decision. Okay? But number one, why I think the company is good. I think the company is good because they ride no AI wave. You guys know as well as I know AI is here. And Oracle is riding the AI wave. Okay? AI needs, guess what AI needs? Data centers. Guess who's building them? Oracle. Oracle's building them faster than anybody else. We gotta love that one. Second thing I like about Oracle, they have massive, sticky customers. Oh yeah, they customers ain't going nowhere. They got massive sticky customers like banks, governments, Fortune 500 companies. Their clients don't switch easily. I like that about a company. You know, when their customer base is sticky like that with banks and governments, you know what I mean? Yeah, that lets me know that those companies ain't going nowhere, which is huge for the future. And then thirdly, what I like about them is their cloud business is exploding. Yeah, their cloud business is exploding. Cloud revenue is growing double digits every year. Yeah, their cloud business has been growing double digit every year. That's huge for a company. One of the reasons I didn't take them out of my portfolio. Shoot, I'm riding and die with Oracle. That's just me personally. I'm not telling you guys what to do, but I like Oracle, you know. And like right now, all I can do basically is just keep averaging costs down. But I'll be telling you guys, shoot, y'all can get in at a good price right now. Okay, we're gonna get into the charts in just a little bit and talk about that a little bit more. But yeah, you guys can get in at a pretty good price right now. We're going to talk about that on the charts. And another thing about Oracle, they're profitable. Oh yeah, you like companies that's profitable. I do. Because when they profitable, it makes me profitable. Okay? They're profitable. 12 billion in net income. Think about that. 12 billion dollars in net income. That ain't no joke. Okay? They're profitable. And they're becoming essential infrastructure. In other words, they're becoming a company that they're going to be essential in the future. AI companies need Oracle the same way cities need electricity. Could you imagine your city with no electricity? Huh? Yeah, all our cities are dependent on electricity. Okay? Yeah. AI companies, they're becoming essential infrastructure. It means you got to have them. Okay? Now that's just from the bear's perspective. But let me give you a little rundown of what the bulls uh really care about. And they got some good points. The bulls, they got some good points. And their number one point, and all bulls think about it like this, is they got over $100 billion in debt, total debt. That's something to think about, you know, when you invest in a company is the debt, you know. And like I say, all debt ain't bad debt. Some debt is good debt. And I just so happen to think that the debt that they've taken on is good debt. That's just me. I'm not telling you guys what to do. But the Bulls got a good point. They got over $100 billion in debt. They're spending. Oracle has been spending aggressively. Yeah, yeah, yeah. They've been putting them. Hey, in order in order to plant a garden, you got to put some seeds out there. But if you want a big garden, you got to put a whole lot of seeds out there. And If you put a whole lot of seeds out there, you just might get a huge win in your garden. Okay, so they got a good point on that. They're spending aggressively, and another thing that the Bears is they don't like Oracle because of their competition. And I have to admit, Oracle do got some deep competition when you talk about these three big boys right here, Microsoft, Amazon, and Google. All three of them bad boys is big giants. I just so happen to think that there's room for another guy on the block coming soon, and you can get him cheap right now. It's Oracle. But those three bad boys that I just mentioned right there, they big boys. And some investors worry about short-term earning pressure. Big spending now means smaller profits today. Yeah, they want the profits right up the top. Like I told y'all guys, this is a long-term play for you guys. Let's look out a year from now or a year and a half from now. I think this is going to be a different sentiment because right now we're in war and everything's, going down. But I don't know if we're going to be in a war a year from now or, I don't know. Nobody knows. God knows. God knows the plan. I just kind of think that, uh, you know, some way, somehow, we're going to quit fighting each other. And man is going to eventually recognize that, hey, we all on the planet together. Why don't we just learn to live together? That's my prayer and my hope. That's one of the reasons I put out a spiritual video every now and then, because people need to return back to God. But I'm not going to preach today. Okay, so I want to say in closing today, uh, should young adults pay attention to Oracle? Absolutely. I think you guys need to pay attention to Oracle. Oracle is one of those companies that moves quietly but builds massively and becomes essential. They'll become essential before anybody notice. Okay? If you're a young investor thinking long term, Oracle is the type of company that should surprise the world over the next decade. This is not, my young investors, a meme stock. It's not hype, it's infrastructure. And infrastructure is where generation wealth is built. And Oracle right now is building big time infrastructure. Yeah, we have a lot of debt, but to buy and build, sometimes debt could be good debt that pays off big in the future. Yeah. So my final message to you young adults is don't sleep on the company building the world behind the scene. Oracle is one of them. And when the AI revolution hits full speed, the companies powering the engine, not just apps, will be standing tall. And Oracle, my young investors, is a company that I think that you guys need to start buying on the dip and keep buying it. This is a company I think you guys need to be in your portfolio. However, I'm not giving you guys financial advice, but I just enjoy breaking the company down and telling you guys about some companies that I love and enjoy. If you like this type of content, subscribe, like, and share. And I'll be talking to all you guys soon. But before I leave you guys, I just want to jump on the charts for a little bit. You guys know I just love jumping on the charts. And we're going to just go ahead and let's look back. I like to always go back year to date. I like this year-to-date chart here because a year ago, where we at right now? Okay, we at 152.80. But think about it. A year ago, we was at 229. That was before the new president came in. Okay, let's look at about 6 months ago. I marked that off at 229, but check this out. It even fell further than that because when you go back 6 months ago and you look 6 months ago, and I gotta go ahead and put a pin up there. Let me throw a horizontal line up there. Right there. I saw all-time high. This is what really jumped off at me when I started looking at the chart again, because I'd never recognized that 329, but we saw all-time high 6 months ago at $329.27. That's a long drop off from 6 months ago all the way down to what we are now. Shoes. Yeah, that's almost split in half. Okay. See that? See how it dropped all the way? High of 329.27 6 months ago. About the time the new president been coming in, it's just been diving ever since. You know, they've been spending that money, on infrastructure for the last 6 months, and you guys can see how it's just trending all the way down, and then it fell actually down to 132.40. I need to put a pin right there for you guys to see that right there. Also, 132.40 was a low 6 months ago. Okay, now let's pull back to 3 months ago, see what happened to this company. We saw it at a low right there. There it is again, 132.40. But look what happened, guys. It started climbing the matter. And it ran sideways. But I want y'all to see this line right here, 160.82. It broke that line, didn't it? It tried to rally up to 171.16, and then the bad news started coming a month ago. It actually broke and ran all the way up to 171.76. Let me put a pin on that one right there too. A month ago. Okay. All-time high, guys. 176. Get that on there. Boom. Boom. And then, guys, guess what's happening right now? A month ago, we've been in war. Let's go back 5 days ago. 171, we saw it at 171 up here. And ever since the war, guys, it's been on a trajectory. This is just 5 days ago. It's been on a trajectory down. And it really fell 3 or 4 days ago. Fell on down, fell on down, fell on down, going down, going down. Tried to run up here a little bit. We're going to start opening up a little bit. But then we had another big fall. The Bears was in town. This is just 4 or 5 days ago. Me opening it on up. We went through the weekend. Then we came out Monday swinging. Opened it on up. Still falling down. I saw it down at a low of 152, but then it rallied back up to 154.98. And let me look at one day, or let's look at today. How about today? Let's look at where we at today. Boom. We open up today at 154. And as you guys can see, we opened it up. The Bears are still in town. They pushed all the way down to 152. The Bulls came back in and tried to rally it all the way up. They rallied it all the way up to 150.14. Okay, Bears came back in, pushed it down today. And then we did break 154.57. See my line that we had back there? We broke 154. It tried to push back up, and it pushed up a little bit to 154.97. But then the bears came back in, and then they ended the day with the bears pushing it all the way down to 153. Oh, even lower than that. It ended today at 152.81. That's what it is. We in after hours right now. It's still trending down. It's at 152.07 right now. Hey guys, let me tell you something. This is an opportunity for a new investor. I'm not telling you guys what to do, but I think a young investor that get in, you can get in now. I would keep an eye on it definitely. Uh, and if you guys get it under 150, 140s, and if it goes down into 130s, I would jump on it like a hot cake. You know, at right now, I would start buying it, put a little bit in my portfolio, and I'll just keep an eye on it. And every time you guys catch it under what you bought it for, buy some more. Put a little bit more in your portfolio. Because guys don't have to buy whole shares. You can buy fractional shares. That $50. Okay, you buy that 150 at $50. And when you see it, if it drops below that, put another $50 in there. Another $20. Just keep averaging costs down. And I think if you guys average costs down for the next 8 months, 10 months, when this thing turn back around, just my opinion, I think you're gonna make a whole lot of money. And that's what we're in the business for, is to figure out how to make money. And Warren Buffett has gave us a blueprint. He said when the market is fearful, that's time for young investors that really understand the game to be greedy. Because the market goes up and it goes down. And we in a war right now. So just something for you guys to think about. Since we're in a war, the market is fearful. And I just want to open this up for you guys just to show y'all. Because I looked at the fear index the other day. Let's look at that. Oh, they're getting a little bit more graver. They're getting a little bit. I saw the fear index just 2 or 3 days ago. It was at 25. You see that? It was at 25, but they got a little bit more braver. They came up to 32, which lets me know that, the market is just kind of, you know, but let's wait till we break through all this blue and start getting back over here to where they start getting greedy again. Because they always get greedy again. And then the market start running. And when it starts running, you guys going to see that greed kick in up in here. Yeah, we're going to make a whole lot of money up in here. When it gets real, real greedy, there starts running real good, we'll make a lot of money. Again, not financial advice. All I can do is show y'all what I see. What I see. Okay, the SPY was down today. The QQQ was down. Hey guys, uh, like and subscribe. I love you guys. I'll be talking to you guys soon. Oracle, need to put that one in your portfolio. Put that in your portfolio. Love y'all.